Okay, Assalamualaikum and good morning. My name is Duratul Akila binti Zamianin, and today I will be presenting my individual assignment for the course Risk, Insurance and Market Practices. The title of my presentation is Insurance Fraud in Malaysia. This topic is chosen because insurance fraud has become an increasingly serious issue that not only affects insurance companies but also honest policyholders and the overall trust in the insurance industry. Through this presentation, I will explain what is insurance fraud, the types of fraud occurring in Malaysia, the factors contributing to its impacts, and how it relates to key insurance principles. Insurance plays a very important role in protecting individuals and businesses from unexpected financial losses. It helps people manage risks such as accidents, illness, property damage, and even death. In Malaysia, the insurance industry has grown rapidly over the years, especially in areas such as motor insurance, medical insurance, and life insurance. As more people rely on insurance for financial security, the system must operate with honesty and integrity. However, as insurance usage increases, cases of insurance fraud has also increased. The situation threatens the credibility and stability of the insurance system, making it an important issue that needs attention. Insurance fraud refers to any deliberate act of deception carried out to obtain insurance benefits that a person is not legally entitled to. This fraud can occur at different stages, such as during the policy application, the underwriting process, or when submitting insurance claim. Insurance fraud may be committed by individuals acting alone or by organized groups working together to manipulate the system. Regardless of how it occurs, insurance fraud is illegal and unethical, and it negatively affects the entire insurance industry. In Malaysia, insurance fraud causes millions of ringgit in financial losses every year. Many of these cases go undetected, making insurance fraud a hidden crime. Some policyholders are unaware that actions such as exaggerating claims, submitting false documents, or withholding important information are considered fraudulent. With the increasing use of digital platforms, fraud has become easier to commit because documents and receipts can be edited. At the same time, detecting fraud has become more challenging for insurers. Motor insurance fraud is the most common type of insurance fraud in Malaysia. Since motor insurance is compulsory, it provides many opportunities for fraudulent activities. Example include staged or fake accidents, exaggerated vehicle damage, inflated repair bills, and false injury claims. These fraudulent activities are often carried out by organized syndicates involving workshops, runners, and tow truck operators. They work together to make fake claims appear genuine and then share the illegal profits. Medical and health insurance fraud had increased due to the rising cost of healthcare. Common examples include inflated hospital bills, unnecessary medical treatments, and exaggerated symptoms. Some policyholders intentionally fail to disclose pre-existing medical conditions when purchasing insurance, hoping to make claims later. This type of fraud is difficult to detect because insurers rely heavily on medical reports and documentation provided by healthcare providers. Life insurance fraud usually occur during the application stage. Policyholders may hide medical conditions or provide false information to obtain lower premiums. Although rare, forged death claims can cause very serious financial losses and require lengthy investigations. Fraud can also involve insurance agents. Some agents may misuse premiums for forged signatures or misrepresent policy benefits for personal gain. This action damages customer trust and harm the reputation of the insurance industry. Insurance fraud is often described as a hidden crime because many cases are never detected. Fraudsters are becoming more sophisticated by using technology to edit documents, receipts, and image. At the same time, insurers are improving fraud detection through data analysis, shared databases, and even social media monitoring. However, because fraud methods keep evolving, insurance fraud remains a serious challenge. One major factor contributing to insurance fraud is financial pressure, especially during economic difficulties. People facing financial stress may see insurance claims as an easy source of money. Low ethical awareness also contributes to fraud, as some individuals believe exaggerating claims is harmless. Other factors include moral hazard, organized fraud syndicates, and weak internal controls within insurance companies, which allow fraud to go undetected. Insurance fraud causes significant financial losses to insurance company. To cover these losses, insurer may increase premiums, which unfairly affect honest policyholders. Fraud also leads to stricter claim verification procedures, causing delays in genuine claims. Overall, frequent fraud cases reduce public trust in the insurance industry and weaken confidence in insurance as a risk management tool. The principle of utmost good faith requires both the insurer and the insured to be honest and disclose all material facts. Insurance fraud violates this principle when policyholders hide information, exaggerate losses, or submit false claims. When utmost good faith is breached, insurers may have the right to cancel or void the insurance policy. This shows how important honesty is in insurance contracts. The principle of insurable interest means that the insurer must have a legitimate financial interest in the subject matter of insurance. Fraud occurs when individuals attempt to claim insurance for property or person they do not legally own or have no financial relationship with. This goes against the main purpose of insurance, which is to protect genuine financial interests, not to generate illegal profits. The principle of indemnity aims to restore the insurer to their original financial position before the loss occurs. Insurance fraud disrupts this principle when policyholders exaggerate losses or claim for items that were never damaged. Insurance is meant to compensate losses, not to allow individuals to make a profit from misfortune. Insurance fraud also affects other principles such as subrogation, contribution, and proximate costs. False information prevents insurers from recovering losses from responsible third parties. Staged accidents manipulate the true cause of loss, making it difficult for insurers to determine whether a claim is genuine or fraudulent. In conclusion, insurance fraud remains a serious and ongoing issue in Malaysia. It affects insurance companies, honest policyholders, and the long-term sustainability of the insurance industry. Preventing insurance fraud requires ethical behavior, greater public awareness, strong enforcement of insurance principles, and effective fraud detection systems. By addressing this issue, Malaysia can build a more fair, transparent, and trustworthy insurance industry. Okay, that's all from my presentation today. Thank you for your attention.